Welcome back to Talk Tickers, the show where we break down these earnings calls so you don't have to.
Right, yeah.
Today we are diving into WD-40's first quarter 2025 performance. And get this, for a company known for a 71-year-old product, they're seeing some seriously impressive growth.
It is interesting to see how they're achieving this growth, you know?
Yeah.
It's not just about price increases. They're actually selling a lot more WD-40. We're talking about like a nearly 9% jump in net sales,
Wow.
hitting $153.5 million.
Okay, so people are buying more WD-40, but what does that actually tell us?
It indicates that WD-40 is tapping into something fundamental, you know?
Yeah.
In a world overflowing with new products, consumers are still drawn to reliable, trusted solutions, and WD-40 has managed to position itself as that go-to solution for a wide range of needs.
So it's more than just fixing squeaky doors.
Absolutely. Their maintenance products segment, which is their bread and butter, saw a 10% increase,
Really?
reaching $145.5 million. That's their third consecutive quarter with double-digit growth in that category.
Wow, that is impressive.
It's a testament to their brand strength and the enduring appeal of their core product.
And they're getting closer to that 55% gross margin target, right? They hit 54.8% this quarter.
Exactly. They've been laser focused on improving their profitability, and it's paying off. They're managing costs effectively and focusing on higher margin products.
Now let's talk about their global reach. Are they just a domestic brand or are they making waves internationally?
They're definitely a global player.
Yeah.
Their success isn't limited to one region. In the Americas, which accounts for about 45% of their business, they recorded an 8% sales increase.
Yeah.
Their flagship WD-40 multi-use product saw a 9% jump, thanks partly to smart promotions in the U.S. and a shift to a direct market model in Brazil.
And what about other regions?
EIMEA, which makes up about 38% of their business, saw an even bigger jump,
Okay.
an 18% increase in sales.
Wow.
Again, the WD-40 multi-use product led the charge with a 21% increase. They're seeing strong performance in diverse markets like India and France.
So they figured out how to expand globally.
It seems so. Their success across different regions suggests they've cracked the code to international growth, which is a valuable lesson for any business aiming for global expansion.
Now let's dive into what they call their must-win battles. What are these key strategies they're focusing on?
They've identified 4 main areas: geographic expansion, premiumization, driving growth for specialist products, and turbocharging digital commerce. Let's start with geographic expansion. They've identified a massive $1.2 billion growth opportunity for their WD-40 multi-use product alone.
Wow, $1.2 billion.
Yeah.
That's incredible.
Yeah.
How are they planning to tap into that?
They're focusing on strategic expansion in key markets. For example, they've seen incredible success in Mexico, having practically quadrupled their business there since 2020.
Really?
And they're using a similar direct market approach in Brazil, expecting similar growth in the coming years.
So they're replicating their success in new markets.
Precisely. They're also laser-focused on high-potential markets in Asia-Pacific, like China, Japan, and Indonesia. Indonesia in particular stands out with its impressive growth rate and unique hybrid market model.
It sounds like they're playing the long game, strategically positioning themselves for global domination.
They are, and it's not just about expanding into new territories. They're also focusing on premiumization, which means offering higher margin products. Their WD-40 Smart Straw and Easy Reach formats saw a 17% sales increase this quarter.
So are people willing to pay more for these premium versions?
Absolutely. Consumers are increasingly looking for convenience and added value, and WD-40 is capitalizing on that trend. These premium formats currently make up about 40% of global unit sales, but they're aiming for a compound annual growth rate of over 10% for these products, which will significantly boost revenue and margin expansion.
That makes sense. What about their specialist products? Are they just sticking to the classic blue and yellow can?
Not at all. The WD-40 specialist products are also seeing impressive growth with a 14% sales increase in the quarter. They see a $530 million growth opportunity in this category and are targeting a compound annual growth rate of over 15% for these products.
So they're diversifying their product portfolio.
Yes, and they're doing it strategically.
Okay.
They're seeing growth across all 3 of their trade blocks, the Americas, EIMEA, and Asia-Pacific, with particular strength in the Americas and EIMEA. They're not putting all their eggs in one basket.
Smart move. Now let's talk about their 4th must-win battle, turbocharging digital commerce. How's that going?
It's playing a crucial role in their overall growth strategy. In the first quarter, e-commerce sales jumped by 22%, largely due to strong performance in the EIMEA region.
So are they just selling products online?
It's more than that. They're leveraging digital channels to reach a wider audience, build brand awareness, and create a seamless shopping experience for their customers. They're using e-commerce to boost sales, both online and offline. It's a smart approach.
It sounds like they're really embracing the digital age. But with all this growth, are they staying true to their roots?
That's a great question. They've adopted a new mantra: few things, many places, bigger impact.
What does that mean exactly?
It reflects their commitment to focusing on their core strengths, streamlining operations, and maximizing their global reach. They're not trying to be everything to everyone. They're doubling down on what they do best.
Makes sense. But are they spreading themselves too thin? They're also in the process of divesting their home care and cleaning business in the Americas and the UK, right?
Yes, it might seem counterintuitive, but this move allows them to focus even more on their flagship blue and yellow can and the products that have made them a global success. It's about prioritizing their core business.
But isn't the home care market a lucrative space?
It is, but WD-40 is choosing to concentrate its resources on the areas where they see the greatest potential for long-term growth and profitability. It's a strategic decision to focus on their strengths.
That's a bold move. So what does this all mean for WD-40's future? Are they on the right track?
They're definitely showing signs of a company that's evolving and adapting to the changing market. Their commitment to innovation, global expansion, and operational efficiency suggests they're well-positioned for continued success.
Well, it sounds like WD-40 is doing more than just stopping those annoying squeaks. They're a company to watch.
Yeah.
Now let's shift gears and have some fun with our This Is Not Financial Advice segment.
All right, let's get speculative.
Imagine WD-40 partnering with a major outdoor brand to create a co-branded line of products.
Okay.
Think a WD-40 camping or hiking kit.
That's a great idea. It could include their multi-use product, a specialist lubricant for camping gear, and maybe even some cleaning wipes all packaged in a rugged portable kit.
They could leverage their brand recognition and expertise to tap into a whole new market segment. Outdoor enthusiasts are always looking for reliable solutions to keep their gear in top shape.
It would be a win-win. WD-40 expands its customer base, and outdoor enthusiasts get a trusted solution for their adventures.
Who knows, maybe we'll see it on shelves someday. All right, that's it for part one of our deep dive into WD-40's Q1 2025 earnings call. Join us for part two, where we'll dig deeper into their financials and strategic initiatives. Welcome back to Talk Tickers. We're continuing our deep dive into WD-40's first quarter 2025 earnings call.
Right.
Last time we left off talking about their few things, many places, bigger impacts mantra.
Right. It's like a chef perfecting a few signature dishes instead of trying to offer a overly complicated menu.
Right.
It allows them to excel at what they do best.
And part of that focusing is their decision to divest their home care and cleaning business in the Americas and the UK. It seems counterintuitive to step away from a potentially profitable market.
On the surface, yes, but think of it this way.
Right.
They're doubling down on what truly makes them unique maintenance and specialty products.
Right.
This streamlining could lead to even better solutions for those specific needs.
So it's a calculated risk. Speaking of risks, are there any concerns about rising costs impacting their profitability? A 55% gross margin seems ambitious in the current economic climate.
It is ambitious, but they're actively managing costs, seeking greater efficiency in their operations, and leveraging their growing sales volume to negotiate better deals with suppliers. Plus, they've linked their senior leadership incentives to achieving that 55% goal. Everyone's on board.
Oh, wow. Yeah.
That's a smart way to align everyone's interests. Now, let's talk about their commitment to sustainability.
Yeah.
They've set a target of a 50% reduction in emissions by 2030. Are they just jumping on the sustainability bandwagon, or are they genuinely committed?
It seems like more than just a trend for them.
Yeah.
Investors are increasingly looking at a company's environmental and social impact, and WD-40 is proactively addressing these concerns. It could be a way to attract a new generation of investors and customers who prioritize sustainability. So they're appealing to both environmentally conscious consumers and investors. That's a smart move. But let's be realistic. Are their sustainability efforts going to hurt their bottom line?
Not necessarily.
Okay.
They're exploring ways to reduce waste, optimize packaging, and improve energy efficiency in their operations. These initiatives can lead to cost savings in the long run.
So it's not just good for the planet, it's potentially good for business too. Now let's talk about returning value to shareholders. They recently increased their quarterly dividend by 7%, which is a nice bonus for investors. Are they prioritizing dividends over growth, or are they managing to balance both?
They seem to be striking a balance.
Okay.
They also repurchased $3.6 million worth of shares in the first quarter, indicating they're not solely focused on dividends. Their strong balance sheet and asset-light business model allow them to reward shareholders while investing in future growth.
So they're sharing the wealth while still planning for the future. That's encouraging.
Yeah.
But let's shift gears and have some fun with our This Is Not Financial Advice segment. Are you ready for some wild speculation?
Bring it on!
Imagine WD-40 partnering with a major airline to create a co-branded travel-sized WD-40 product.
Interesting. What are you thinking?
Think about all those frustrating travel moments, stuck zippers on luggage, squeaky airplane seats.
Right?
A travel-sized WD-40 could be a lifesaver.
They could sell it in airport shops and duty-free stores. It would be a convenient and practical solution for travelers, and they could even market it as a must-have travel accessory.
Right. It could even come with a little travel-themed carrying case.
Mm-hmm.
It's small, solves a common problem, and taps into a whole new market. Who knows? Maybe we'll see it on shelves someday.
That's a fun idea, but remember, this is pure speculation, not financial advice.
Of course. Now, before we wrap up part 2, I want to circle back to their overall performance this quarter.
Mm-hmm.
What stood out to you the most?
Their ability to achieve significant volume growth for a mature product is impressive. It suggests they've managed to stay relevant and appeal to a broad customer base, which is key to long-term success.
And their strategic focus on their core strengths, along with their global expansion efforts, indicates they're well-positioned for future growth.
Agreed. They seem to be making all the right moves.
Well, there you have it, folks. That's part 2 of our deep dive into WD-40's Q1 2025 earnings call. Join us for the final part where we'll wrap up our analysis and offer some closing thoughts on what this all means for investors and consumers alike. Welcome back to Talk Tickers for the final part of our deep dive into WD-40's first quarter 2025 earnings call.
We've covered a lot of ground, from their impressive global growth to their strategic divestment of the home care business.
They're certainly making some bold moves.
And their performance this quarter suggests those moves are paying off.
Let's talk about your guidance for the rest of the fiscal year.
Sure, they're projecting net sales growth between 6% and 11%, which translates to roughly $600 million to $630 million after adjusting for currency fluctuations.
That's a pretty healthy growth range.
It shows they're confident in their ability to continue executing their strategy.
They're also expecting gross margin to stay strong, between 54% and 55%.
Which would put them right on track to hit their target.
And their earnings per share are projected to grow between 9% and 14%.
All solid indicators of a company in a strong financial position.
It's worth noting that their guidance excludes the impact of the home care and cleaning business they're divesting.
Right. They want to provide investors with a clear picture of their core business performance.
Makes sense.
Overall, their guidance suggests they're well positioned for continued growth and profitability.
So what's the big takeaway from all of this? What should investors and consumers be paying attention to?
Well, WD-40 is a classic example of a legacy brand that's not afraid to adapt and evolve.
They're not resting on their laurels.
They're constantly looking for ways to improve their operations, expand their reach, and innovate their product offerings.
Their focus on their core strengths, their strategic divestments, and their commitment to sustainability all point to a company that's thinking long-term.
Exactly. They're not just trying to make a quick buck.
They're building a sustainable business for the future.
And their performance suggests they're on the right track.
Now, it wouldn't be a Talk Tickers episode without our This Is Not Financial Advice segment.
All right, let's get those creative juices flowing.
Imagine WD-40 partnering with a major sporting goods retailer.
Intriguing. Tell me more.
They could develop a co-branded WD-40 bike maintenance kit.
That's a great idea. They could include their multi-use product, a chain lubricant, and maybe even some cleaning wipes, all specifically designed for bicycles.
It would be a convenient one-stop shop for cyclists of all levels.
They could sell it in-store and online, tapping into a massive market of cycling enthusiasts.
It would be a perfect way for WD-40 to expand their reach and appeal to a new audience.
And for the sporting goods retailer, it would be a unique offering that differentiates them from the competition.
It's a win-win.
Of course, this is all purely hypothetical.
But hey, you never know what the future holds.
That wraps up our deep dive into WD-40's first quarter 2025 earnings call.
We hope you found this analysis insightful and engaging.
Remember, as always, this is not financial advice.
Do your own research and consult with a financial professional before making any investment decisions.
Thanks for tuning in to Talk Tickers.
We'll be back soon with more earnings call breakdowns and hot takes.
Until then, happy investing.